Greetings, learners. My name is Mr. Simbi, and welcome to today's accounting class. I hope that you guys are practicing, because in accounting, you need to keep practicing daily. You need to keep practicing. And in today's class, we're doing a statement of comprehensive income. And what you see here is an extract pre-adjustment trial balance of best dealers at the end of its financial period, which ends on the 20th of February. We have some adjustments with us. There is adjustment number 1, adjustment number 2, and number 3. Now, what we want to do is to do these adjustments and record them and see how would they affect our statement of comprehensive income. It is very important that whenever we do the statement of comprehensive income, we do the adjustments properly, for it is when you do your adjustments properly that you get more marks. Remember, what we want is to get more marks. Let's now read adjustment number 1, and it reads: the owner took a handbag, trading stock, for his wife as a birthday gift. 3,600 was the selling price. All goods are marked up at 50% on cost. So the moment the owner takes goods, we call that drawings. We call that drawings. It is very important that we get to know that drawings are not recorded directly into the statement of comprehensive income. Drawings are not recorded directly in the statement of comprehensive income. However, they get to affect other adjustments, such as your trading stock surplus and the trading stock deficit. So we don't ignore it. The moment we see it, we need to record it. And you will see eventually it will have an effect when we do our trading stock surplus or trading stock deficit calculations. So here is note number 4, inventory note. I'll then come here and I'll say trading stock. And I will have an amount from the list of balances, trading stock. Here's my trading stock, 132,000. So I'll come here. I have my 132,000. The owner has taken goods for personal use. So I'll then come and I need to record the goods that were taken for personal use. The question that I have for you is, when I say minus here, do I come and subtract the 3,600? Definitely not, because this is the selling price, and the drawings must always be recorded on cost. So that means I need a cost. I'll say 100 over 150 multiplied by 3,600. 100 over 150 multiplied by 3,600. And it will give me 2,400. 2,400 becomes my cost then of these goods that were taken. So I'll come here and say minus 2,400. Very important. Drawings are not to be recorded at the selling price. How do we record drawings? On cost. So we have to come here and calculate the cost. Very important. Remember that. It is of great importance. This is how it would appear. Remember what we did? We took the 132, then we subtracted the 2,400. Let us see if we have another adjustment. The next adjustment reads: a dissatisfied customer, J. Gray, returned handbags with a selling price of 48,000. No entry has been made. So once a customer returns goods, it has to affect 4 accounts, and we summarize it as discount. We summarize it as discount, and the selling price is 48,000. I need the cost of these goods. And for me to get the cost, I will say 100 is what we want, and we should know the markup by now. And remember, we just spoke about it, and the markup is 50%. So what we want is 100 over 150, and then we multiply this by 48,000. All right? I want you to quickly punch that in your calculator, where you say 100 divided by 150, then you multiply that by your 48,000. That is the selling price. and you should get an amount that is 32,000. That 32,000 therefore becomes the cost of these goods. So I bring my 32,000 here. Once I have these two amounts, I now need to know, what do I do? In the debtors, this is a customer returning goods, so it will be a minus, here to be a minus. Here we say minus, and here we say plus. So I'll come to my sales, and I'll open my bracket, and I'll say my sales is 950,000. And then I come and I subtract my debtors allowances, minus 7,000. And then I come and I say minus 48,000, minus 48,000. So I've recorded this one. And then I come to my cost of sales and I say 400,000 is the amount in the list of balances, minus, because on cost of sales I have a minus 32,000, minus 32,000. There it is, I've recorded that one. So I need to go and record the next one, that is in trading inventory. In my trading inventory, I'll come and I'll also say plus now. Plus, because here is a plus 32,000. All right? And then I'll now need to record in my trade and other receivables, debtors control. And here is my debtors, 390,000. 390,000. Then I'll say minus 48,000. That is what I would then do. Very important that when you have this adjustment, you know how to record it. It affects 4 accounts. That is your debtors control, your sales, your cost of sales, and your trading stock when we are looking at it from the statement of comprehensive perspective. All right? Remember, note number 4 and note number 5 affect your statement of financial position. All right? There it is. This is what we have just done. This is what we've just done. The 48,000 and here 48,000. Minus 32,000 and here we say plus 32,000. All right? So this is what we have just done. I want to see if we have another adjustment. There it is. It says, goods worth 54,000 were destroyed when a water pipe burst in the storeroom. The insurance companies agreed to cover 60 cents in the rand. The claim will be settled in the next financial period. All right? What then do? We come to our note number 4, inventory note. Then we say these goods are no longer part of our stock. So we come and we subtract the 54,000 minus 54,000. Then we come to trade and other receivables because they said the insurance company will cover 60 cents. So we now need to know how much would they give us. They'll cover 60 cents in the rand. 60 cents, so we say 60 over 100 multiplied by 54,000. That is going to give us an amount. Please punch that in your calculator. You get 32,400. So I'll come here on my trade and other receivables now. I will now say there is money that we will receive from the insurance. So I'll call it insurance claim. Insurance claim. So I'll come here and it is insurance claim. And how much are we going to receive? We're going to receive 32,400. But what happens now to the 40 cents? Because the insurance company is going to cover us 60 cents in the rand. Who is going to carry the burden of the 40 cents? It becomes our burden as the business. All right? So we now have a loss on stock due to water damage. And that is the 40 cents. 40 over 100. Multiply by 54,000. And then that will give you an amount that is 21,600. So that becomes loss of stock. It now goes to your statement of comprehensive income. All right? So when we come here, we now say trading stock loss due to pipe burst. I can say 40 over 100 multiply by 54,000, just as I have done here. And then I'll get an amount which is 21,600. The other way of getting this amount would have been to say, I'll write it down here, to say 54,000, then you subtract what the insurance company is going to cover, 32,400. 21,400, and you still get your 21,600. That is how you do this particular adjustment. Dear learners, let's go for an ad break, and I'll see you shortly.